New PPP loan round coming in 2023 plus EIN only business funding in up to $5 million and above without collateral and no hard credit checks. In fact, bad credit is acceptable and as well as lower documentation. Hi, this is Michael with Viral Funding Solutions. Welcome in, everybody. I'm an expert business loan broker, which is another way of saying I know how to handle documentation, evaluate, analyze it, and connect you with the best lenders and underwriters that are out there. So no further introduction. Is there a new PPP loan round coming in 2023? So the answer to that is not yet. I know many of you in here are very hopeful that another round comes up, and a lot of you have the SBA EIDL loan and are still waiting for that to be forgiven completely. But there is some news on the EIDL that I won't spend too much time on, but they're looking to forego anything underneath 100,000. And I know there's a lot of emotion behind that where why don't we get 150? Why not at least 200,000? So there are all of these questions that come up. But what about a new PPP loan round coming in 2023? Do we have to go on a strike? Do we need to put ourselves out there even more to get it? Well, the answer to that is realistically no. So this stopped way back in 2021 after multiple rounds and help, especially with what was happening with a lot of fraudulent activity that caused a lot of the shortage, as well as a lot of it was already depleted, and how it continuously went on, it couldn't give any more rounds for it. And there was a lot more that wasn't part of that. But through the Consolidated Appropriations Act, there was a law signed by President Joe Biden, in case you didn't know this, to bring upon some certain updates and things that were streaming through the CARES Act at that time for due to the first two rounds that were depleted. So I won't get too much into all of that and what happened in all of it. Just know that there are alternatives out there that are available, which I will be getting into here in just a second. There is a PPP loan alternative up to $26,000 per employee in a refundable payroll tax credit. So if you have W-2 employees, you're paying on W-2 wages, then this may be something you can qualify for. And I'll get into the share screen in a moment to walk through a bit of the qualifications, but I'll also be sharing about 9 to 15 or so other alternatives to the PPP loan. And no, one of them is not EIDL, unfortunately, or is it the 10K grant? A lot of people are having problems with those. I mean, just a few current updates there, but still, even without the PPP loan and what all was forgiven there, people are expecting the same response with EIDL. And just remember this at the end of the day, that we are not always at fault for what happens, but we can be in control for as much as we can. And a few pieces of that outside of our own finances, it's our own attitude and effort. We can control those. So making sure we're in the best of spirits will really help out. But I know there are all of these payments we need to have forgiven. But in the meantime, I'm going to give you a few options that are available, and I'm sure you'll enjoy these. So let me go back into this share screen and let me actually move over to this page. 1 second. So what you are seeing on your screen is a page that I created, and I'll link this to you down below in the description. And it's updated for 2023. And if you're watching this later in 2024 and beyond, that'll be updated as well. And see if you're qualified for the Refund Your Business Needs. Click play to watch the video. So I created an A to Z application walkthrough video, and it goes through exactly the process to qualify for this employee retention credit. It's what it is. It's a refundable payroll tax credit through the CARES Act and a few others thereafter through the Treasury Department. So this is what it is, and I'll scroll down here in just a second to run through, but you can see this page. You'll want to watch this video. If you click this button, calculate my refund, see how much you can qualify for in less than minutes. And this program is running out rather quickly, as in April 15th of 2024, 2024, excuse me, and 2025, depending on the 2020 and 2021 calendar years. And there's a little bit more of that. But here it says, see how much you can qualify for in less than a minute. PS, want to see a text version? Click here to see the readable version. And if some of this is moved around, if this isn't in here or there's something different, then you'll notice that. But you see here the ERC, the Employee Retention Credit, ERC or ERTC for short. is a refundable payroll tax credit, not a loan, or when people use it as it's a grant, that's not really it. Designed to reward many businesses up to $26,000 per employee for retaining employees during COVID-19. The credit was initially signed into law March 2020 as part of the CARES Act. The credit was then later expanded upon with the Consolidated Appropriations Act, as I somewhat mentioned here seconds ago with the PPP and what was happening there around the third round, and in December of 2020, and the American Rescue Plan Act in June of 2021. So here you can go through this page and see if you are eligible for this, and I'll go through this one rather quickly. And again, I'll link this to you down below in the description. If not now, then in the replay, you'll see it. You are eligible if you had W-2 employees in 2020 or 2021 and any of the three following. One, if you had a reduction in revenue, 50% reduction in 2020, if you had a reduction in your gross receipts in 2020 when comparing to the same quarter in 2019 by at least 50% and or 20% reduction in 2021. If there is a reduction in your gross receipts in 2021 when comparing to the same quarter in 2019 by at least 20%. Number two, if your business was impacted by a government mandate, so you're seeing here, it's not only one. And if your CPA, your accountant, were looking at this, they may only be able to determine it based off of your gross receipts. And why you wouldn't want to turn to your own CPA, I'll go into that in a moment. But just understanding all the tax codes that come with this and understanding the whole PDF, there's a lot of documents. And so you need to leave this in the hands of payroll management experts, my team. And this is something that we can go through and I can help you out on. And so here, if a government order had more than a nominal impact on your business operations, such as required to fully or partially suspend operations tied to government orders, inability to obtain critical goods or materials from suppliers because they were required to suspend operations due to governmental orders. 3, limiting occupancy to provide for social distancing due to governmental orders. 4, governmental orders to shelter in place preventing employees from going to work. Number 5, other similar impacts from the government. Number 3, if you started your business after February 15 of 2020. So this only applies if you started after that date, then this would apply to you. And if you didn't, it's okay if you started before this. And if you received the PPP loan, in case you're wondering, yes, you could still qualify for this. We just don't want you double dipping. That's why we asked for the 941s, 941X amended payroll and tax documents. And I won't go too much into all the specifics on all that right now, but you'll be able to do it through a very safe and secure free application. You can understand what you'd qualify for, just kind of a rounded number, but I would recommend having those 941s available and ready to submit. If you started a business after February 15th of 2020 and had annual gross receipts less than $1 million. So that only applies if you were a business that started after that time. So just know that that is available and that it is there. Now let me scroll down here. Just looking over some of my notes to make sure I cover it. The key benefits of working with us: experienced staff, fast response time, certified expertise. You want to leave this in the hands of the experts and the best that are in this space that I vetted, that I make sure that those are the ones that work best for you. How it works in 3 fast and simple steps. You will work directly with our expert payroll management experts. These are the best of the best, literally, to 1. Step 1, enter your information. Figure out how much you could get back in literally minutes by answering a few basic questions about your company for free. No application cost or hidden fees. Step 2, you file online in minutes. Our safe and secure portal allows you to streamline the complex process so you can upload payroll and tax documents. Maybe there will be a payroll summary report or what they call a payroll journal, but if not, that's okay. So payroll and tax documents needed to get you the highest amount back possible. Step 3, you receive your check. The U.S. Treasury will receive and process your claim and then issue your refund so you can push forward with more confidence and certainty. And so we'll file on your behalf so you don't have to worry about it, and try to do it on your own. That is a cause for a lot of mistakes and perhaps failure to get anything or very little of it. And here, note, the service charge, it varies depending on the provider, but I vetted and I've seen what's actually, I believe, to be best and most efficient. The service charge is based on a percentage of the credit that has been recovered. We calculate a provider fee with our free analysis, but it's usually around 15% if you pay later, or you can choose to the 10% if you want to pay up front with that option, if it's still available for you. If there's any changes, you'll see that. And sometimes you've seen 20, but it's not usually you'll see a lot of that. If you go somewhere else, you'll see 20 to 25% and even higher. And if you do it too low, sometimes that means it's not as effective. So you have to be careful. And I've kind of found that equal balance of what I believe to be working out the best. So you don't have to worry about much of that. Now, over here, since we typically are able to recover, if you want to pay up front with that option, then that's the fee on the total amount that you receive that it comes out of. Other companies out there will charge you between 20 to 25%, which is higher, and it can be less effective, and it can be where you don't get max credit. Since we typically are able to recover 10 to 20% more than someone less familiar with this program, our fee is very affordable. Just like a good CPA, using the right team with decades of payroll experience, should I add, for this process, it will pay for itself. You get higher approval odds by far. It's crazy how much than just going to your own CPA, and they don't maximize and know all the complex tax codes. The ERC tax code is over 200 pages. I've seen this stuff too that come with payroll, and it's crazy, and so forth. Plus, you have to keep in mind the amount of work it takes for us to fulfill and to file on your behalf, and so forth, to make sure that it's done right. So you're not making these mistakes time and time again, days, weeks, months, and years you're wasting energy on, only to find out that you didn't get enough credit or any at all. And then you calculate your refund. Just very quickly about us, but I want to say this before I move into that. If you go to this page, if you don't qualify and you want to see alternative funding, if I didn't say this, up to $2 million and above, incredibly fast from a real expert, myself, who knows their stuff. Again, I'm not a glorified person just marketing and setting you up for information. I actually take the time on my back end with all I'm doing with my lenders on different services to look over information, documentation, finding you the best provider, and so forth. So you can click this link, and it may take you over to a blog post that I created that is very in-depth, or it could take you over to a documentation, which I'll be flipping screens into in a second to show you some of the other options to the PPP loan and ERC alternative. So at Viral Funding Solutions, we've helped out tens upon thousands and even more get the ERC credit through our exclusive partnership to expert payroll management experts that I deal with just about every single day as your go-to destination for ERC, as well as safe and secure alternative small business capital, fast and simple. So whether there's attorneys on the team, the CPAs, everything's in order. We funded all types of companies and continue to share our best tips and secrets to getting funding so you can build, grow, expand, and even get out of a tight pinch. When the banks say no, we say yes. And here I put, it's your time, it's your money. Go ahead and claim it before it's too late. The ERC credit is projected to be around until 2024, if not 2025, but it can literally be closed at any time. Look at what's happened with the SBA EIDL funding, the 10K grants everybody's still stuck on, and even the PPP funds, gone. And you'll lose your reward and chance to put the credit back into your business. Do you want to be that person literally sitting on your couch, tuning on the television? Not that you want to watch it, but you just seek entertainment. That's the fulfillment of it. That's the back end subconsciously and consciously. Or do you really want to be that person who says, I did it, I took a chance and it paid off, and I have the credit, I don't have to go seek out alternative funding, or what I don't have to do is seek out at least as much. Or if I have everything that I need, I could do that. About myself, very quickly before I move into the next topic. So I am a business loan broker expert, in case you guys were wondering again. And I started like every 9-to-5 employee with the dream to become their own boss as a business owner, entrepreneur. And I worked really hard at this in the start, and I put it kind of in a third person view or so. In the start of his journey and further down the road, he had to figure out the ropes to getting business financing to build, grow, or second person, to grow, expand, and even get out of a tight pinch, going through the struggles and troubles of getting funding, let alone to find the right source with the right partnership and roadmap was the challenge. Eventually, I found my way. And after funding my multiple businesses, and I run ones in the digital marketing agency / lead generation, affiliate marketing in the health space, and then a few others that I was very dominant in, and I still am because I ran those for many years before I got into becoming an expert at this and eventually focusing on this as my primary thing. Eventually, I found my way, and after funding my multiple businesses, then I decided to use that knowledge and expertise to help others get business funding through the lens of an education-first approach with personalization and customized, understanding you as a person and as a human first, and then in your business second as well, so you don't have to go down the wrong path and making mistakes after mistakes like I had, learning this and having to apply from place to place. And if you've done that, and my question is, have you learned from them? That's when Viral Funding Solutions was born. If you're ready to get started, you can begin there, and it'll take you over to the page that you can get started with that free, no-cost application. Now, let me switch screens here, and then I'll get back into the comments, guys. Give me 1 second. Okay, this page here may look familiar. So give me 1 second while I reshift some material. It'll take no longer than 10 seconds. We all have a pause, don't we? I want to make sure that I cover this. Yeah, I covered all of this with the payroll summary report. And I can go even deeper into this stuff because I've helped out a lot of individuals with it. But let's just say the payroll summary report, if necessary, and then the quarterly 941 quarterly tax filings. That's what would be asked for. And there will be a checkbox that you'll be able to select based upon those quarters if available to you. And I see a few comments here. What do I charge for the ERC? So it is a total amount on what is recovered, as I just mentioned, and perhaps you heard me say it. So it's somewhere around 10% if you pay up front, if you want to decide before you retain your credit, or it's 15% thereafter. Yes. It's usually on the total approved amount. You're correct, Alma. Appreciate you. Thank you for joining me as well. I've seen quite a few things that you've been posting. But yes, it's usually kind of like the revolving credit lines. If you guys have ever received business credit cards, there's sometimes what's called a success fee. And that's kind of how you can look at it in a sense. So there's a performance program sometimes you get, and then there's also a done for you membership in some cases where you don't have to pay a success fee. Either way is fine depending on your needs, of course. But yes, and that's okay. There's nothing wrong with that because that's the cost to fulfill from experts doing this. It's when people go get a personal loan, and I'll be covering that here in a second as one of the options, is a lot of the times you see at least 15%, if not 12%, if we were able to drop it down for a specific client. Why is it 15%? Because look, you can walk into a bank if you want and try to get approved, whether you get approved or not. Let's say you get 10,000, but over here, myself and my team, because we are the experts at this, we probably get you recovered 50 to 100,000 in a lump sum in a term loan, installment loan, with personal lines of credit, with personal and or business credit cards. So we can give you a better minimum to maximum. And so you have to then look at it and go, well, if I'm paying less than 10% in a fee, who's actually working on my file? I would very much question anything underneath 10%, to be honest with you. They're not a lot of the times worth doing that investment. So be very careful about who you get that information from. Yeah, but that depends on the individual. So you're saying that, but someone else, it's not a non-factor. And it's the same thought with everybody else as it is with me. It's like, why is it so much? Because I just mentioned those parts of it and what they have to go through. So that's not a lot, to be honest with you. And a lot of people are even grateful just to be having that credit on hand. So the way you have to look at it has to shift. It's the belief we think about, and a lot of the work that's being done on the back end to fulfill on that, and having to do it yourself, taking all that time to do it, and you do it incorrectly and you file wrong. You have to be careful who's handling that. And so there's more pieces to that puzzle, but let me jump into this document. And this information, guys, I will try to leave for you down below in the description. Let me move this first. And one thing I do want to mention, I know it is a bit dark. I can put the light on, and it's dark here in Washington. If you guys have been here, yeah, the weather lately has been bipolar. It was raining, and then it got sunny, and then it became rainy again, and then again. But one thing I do want to mention, like many of you, I struggled when I was starting my business. You guys got to learn about me a little bit there earlier. But like many of you, I tried to get away from my 9 to 5. I needed to have time freedom myself and for my family. I was literally stuck in a 9 to 5 logistics financial role, and I couldn't move up another level because the person in front of me did not want to retire. I kid you not, I'm not making any of this up. I don't want to think too much back on that time, but underpaid and all these things is an understatement. And at that time, I knew the company was going down under, so I was looking to go back to school to finish up another semester for another degree. I went to school originally. I played soccer. I was a Division I soccer player. I then went into it for sociology, eventually then leaving that world and getting into the whole chemistry and mathematics because I was always strong in that. So then that led me down the route of chemical engineering. And then thereafter, after learning a lot about that, I found out that eventually I wanted to start a business later on. So I thought maybe I'd go into business administration and learn those skill sets and for the market. And eventually I pivoted, rightfully so. If you guys were in my shoes and looked at it the way that I did, you probably think that very thoroughly. And so I did that for some time. I worked in construction, manufacturing. I worked in various roles before I went into that financial logistics position. Company went down under. I was preparing already into some passive investments, and I got into that time digital marketing agency, affiliate marketing, the whole lead generation. I did a hybrid of affiliate marketing with an e-commerce on a health business, and I did a few things. Eventually going into another few ventures, and then this one being my primary focus is as a business loan broker expert. So I just want to give you guys a quick rundown. And I was on that point in my younger 20s where I did have to go back on unemployment benefits. It sucked, on food stamps, and I felt very embarrassed. Think about an introvert feeling very embarrassed in a position where I went to school, I worked in various roles, because it's what happens at times. And I wasn't the one in the cubicle. I was actually working on the field. I was actually pumping out the tooling out of a machine. And I come from a manufacturing family. I have uncles who are in the construction business. And so these things I understand very gratefully. And I had to work my way up to eventually being in that space. Did I have to go through this to get to that? Not exactly, but I have a wealth of experience at my age already. And I've worked with the owners of a lot of these businesses. They actually brought me into their boardrooms. And I was looking at a lot of systems and mathematical designs on the board. And so I would be in there from time to time. They knew how I did things and how punctual and disciplined. And I really started to learn how to become more punctual and disciplined over time. It didn't just evolve in a day or two. But let me get back into this subject and then we'll close up. Here's a document that I'll leave for you guys down below. And it may look different in time. It may or may not be there, but I'll leave a questionnaire as well if you guys want to get in touch. A lot of people always want to call me right away. Fill out the questionnaire first down below. I'm very punctual and disciplined. I have processes, systems, and automation to all of this. I told somebody on the phone yesterday about how I do things and why I do them, and why don't I just pick up a phone, because this isn't a call center. I'm not just a customer service rep. I very highly value my time. I very highly value character, and I have to make sure I'm vetting this very correctly and seeing something on the surface level before anything. And if you guys would understand that, as an entrepreneur / business owner, we have to be very protective of our energy and time. Before you click through the application down below, I told you about in the video, or this was pertaining to another video that I made. And this is the document that led into it. So this won't be like that. Below are more of the qualifications for revenue-based funding and these other services. Okay, quick break, I know. Credit, cash flow, collateral. Those are the three that I look at. When I'm ever evaluating and I'm looking at problems and I'm digging up more problems, pain points, questions, roadblocks, obstacles, I do all of this and I'm very good at it. And I'm an introverted person. So just understand that I listen very carefully. If you hear me pausing, it's not because I'm not there. A lot of people get surprised when that happens. It's because I listen more than I speak. And so I go through credit, cash flow, collateral. If you have none of these three, then you have a vendor credit route to go. And if you're a startup or a non-startup, it works just fine. And credit, cash flow, collateral, you either have one of these three, two, or all three. And I look at maximizing your best potential around one and even multiple of those. No, guys, if you guys are seeing in that comments, there's somebody who copied my picture and probably created it on their own YouTube. That's not me. Where it says text me, that's not me. Be very careful too. Cautious on the comment section down below. If there's anybody that it looks suspicious that's doing this whole comment follow train, it isn't by me. I'm not associated with them. Just be very careful about that. So I'm running through those scenarios each and every time. P.S. You can scroll down to the very bottom of this document to the conclusion part and locate the business funding questionnaire to get a highly personalized and customized email response for your best funding option and options with what you see below and more. Also, a free 6-step pre-approval lending checklist is included. In case you have that already, it's okay. And if you're waiting for a response from me, I will get back to you soon. So without going in depth into this exact service, but this is based on revenue. You've heard of the merchant cash advances. There's a hybrid cash advance / term loan option. This is what that is. The hybrid advance / term loan, somewhere between 3 to 24 months. And I'll go into some of the options that entail with more time if you qualify for those. And those are based on cash flow projections and assumptions and cash flow right now and a bit more. But these are the qualifications for these 3 to 24 month terms that you could sometimes, and a lot of the time, see more of the medium, the higher rates. But the point of it is, does the benefit exceed your repayment? That's what you have to analyze at the end of the day. Does taking this money double, triple, quadruple your money, or are you making 100% out of this, 200, 300%? What's your ROI from this? What is your financial? What is your activity ROI? A lot of the times, too many of you try to justify taking this money and saying, I just needed it now. And then you just fall into a repetitious cycle of making ongoing payments that you cannot afford. You couldn't pay it off earlier, but you found yourself stuck in a situation. You took that money. You're liable. You're accountable. You're responsible. And I'm not saying this to sound aggressive or mean or negative at all. This is just truthful. I've seen videos out there where people create things on the news. Well, this person took out an advance or a slash term loan, medium to higher rate. Now they can't afford to make their bill payments and they can't afford to keep their store up and running. And they couldn't even afford that before. So they found themselves in a situation where they didn't have that right pattern recognition of how to take the money or how much money they needed to take and how to exactly apply it. And even if they knew how to apply it, they thought that everything else would resurface, but their expenses just started accumulating. So if you guys don't understand how to take money in the first place, we need to have a conversation, or you just need to look back and look at your actual business plan and decide, what do I need to do? How do my numbers look now? What will they look like if I did this? And if you're a startup, you may not have that. So you have to have a great business plan together. Otherwise, you will always complain about this kind of money. You're operating for profit. Nonprofit does not qualify. Do you have a business checking account? It must be in the name of your business, not a personal account that you use for business. If you're using a personal account for business, you can go to the self-employed small business as well option below in green heading, as I said there, and not transferring funds from personal to business. That does not count as stated true organic revenue. When you're depositing from personal and wire transferring and doing all this stuff, moving from personal to business, electronic transfers and all, that does not look like organic revenue. You're not depositing directly into that business checking account that especially you're applying with. So this can be money that's earned from other vendors, suppliers, and they're moving that money into this account or however you're depositing. If you're doing it right, then we may ask for other business checking accounts that you have, whether it's the same institution or others that we'll have to pull from if it makes sense to, and we look at it. Online banking is set up 450 plus, although 500 plus FICO Experian credit is best, if not 550 for lower revenue that sometimes we'll ask for. Below 15K, but you can still get a look. So it just depends on the revenue category, your industry, your time in business, non-sufficient funds, and all these things. 4+ months time in business. Other ones you'll see about 3 months, others about 6 months. If you're a startup, go to the green heading that reads personal business / startup loan option 1, and you can go through these below it as well. There are more options. 3 months of revenue of at least 5,000 plus per month, and on your lowest month, 5,000 plus. At least 3 to 4 months, Up here, we also have an option for 3K plus on your lowest month in the last 90 days for a different service and a provider that I have. At least 3 to 4 plus deposits per month. Others that want to see more, especially if you're an A-paper client, sometimes they'll ask for like 5 to 6 plus. You're depositing your funds into your primary business checking account and not transferring with multiple accounts over and over again, which looks suspicious and is hard to track, especially if those online transfers from checking, if I've seen these a lot of them, and comes from like a vendor or supplier, then it wouldn't be counted as true deposits and be stated revenue. If you have multiple business checking account transfers, then we will have to look through, as I said earlier, all of them if it makes sense to. Sometimes the lender doesn't want to because we know for a fact they know that we don't have to do that based upon what we currently see. But also make sure you apply with your highest revenue one. Deposit everything into that account. This isn't just based on credit card statements like a traditional merchant cash advance, guys. This is encompassing all revenue that comes into the business. Cash, ACH, wire transfers. How are they being transferred? Electronic transfer. What's happening there? How are you depositing? What are you depositing? When are you depositing? What's coming in versus what's going out? How much comes in versus how much comes out in different periods, different months? What's your average daily bank balance, average monthly bank balances? So there's more that comes with this. When people go, I didn't get the 50,000 or 100,000 that I wanted, and well, because I explained this stuff to you and how it works. Others don't explain it to you, and you wonder why you don't get what you get. And so here, let me move up here, excuse me. If you have bank statements with different banks, we will want to see at least 3, if not 4, depending on the state for each bank account. And you will want to apply with your highest earning revenue bank account. That's how I would lead into it. No more than 5 non-sufficient funds, NSF for short, or negative days in any of the last 3 months. Example, bounce checks, overdrafts. So you can go even deeper into that. If you're falling behind on any current merchant cash advances or cash advance hybrids, if it's all revenue, if it's just credit card statements, I just don't prefer those as much. I prefer all revenue coming into the business. Gives you a better look. Or similar, for like a week or so, you won't qualify. Current loan consideration, if you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. more funds, which are second to fourth positions, or some that even go more, but that's overextending, may be available. If you have an existing cash advance, it will cause a reduction in what you can get. And if you had more positions, you may not get anything at all. This goes the same with all business loans, but if it's EIDL, PPP, ERC kind of related, then you are okay. They are not usually correlated and shouldn't cause a reduction. Consolidation, for example, we can either give you a second position if you don't already have one. Usually we want to lead in with you having just one position where you don't have to pay off your first one, or we give you a large loan and pay off your first and you net the difference. Not have a default with another advance/loan company, even if it's a term loan, advance/term loan option, regardless of how long ago. You usually don't get more funding in this industry with the default. There's like 1 to 2 lenders who may help you, but you'll start with a lot less if you get any at all. There can also be a default with a judgment in place, which doesn't make it any better. And when you default on a lump sum, no lender will lend lines of credit. So there's some that will out there go, we'll give you a little bit, but here's a very short term, higher rates. Background checks. If your background report comes back with a criminal record or past financial issues and past UCC filings too, then it can be an automatic decline. But we're reasonable. If it wasn't in the past, if it was something in the past and you've changed your ways, I've had a lot of clients in this position, not used for real estate investments like fix and flips, rentals, Airbnbs, passive investments, multifamily. Use the personal business startup funding that's below, as well as on the credit line hybrid that you can see later below. Or if you're looking for traditional finance or real estate financing with private lenders, I have those as well, and I do a lot of that. Also, don't have issues with financial fraud, past default and past default judgment in place, submitted altered bank statements to another lender. The application right there, a few bits of details. We'll skip over this to get to the next option. But here I go over how it works, what the expectations are, what you need to go through to make sure it works, why the numbers work the way that they do. So if you are doing a certain amount of revenue and this is what you have, actually, I can get a better accurate representation once I have the documentation, and I'll be able to say, okay, this is what you can afford. This is how much we could be able to possibly lend you. And so here we move through some of the qualifications. If you're an A, B paper, C paper, etc. client, let's run through this. But there's some examples. I might leave this out down below. The underwriting. So there's no questions asked. I have a lot of people who don't really understand because they don't take the time to understand it, or somebody doesn't educate them enough. But that's what I'm here for, to help you. It's not all your fault. But if you keep looking at something and you're like, well, there's something better, then that's not my fault at all. That's on you at that point. And a lot of the times when people have that thought or process, it ends up not going in the way that they want. So here, some numbers depending on your file. And that's why I recommend filling out the questionnaire more through underwriting. So let's go past this option and let's go into the self-employed. This is an alternative here if you have very low revenue. And if you're doing around 3,000, like I mentioned, this is the self-employed for all small businesses, 1099, gig worker, contractor funding, and more. I might tell you to skip it, but if it's depending on your file, I may tell you not to. That's why you have the questionnaire filled out. That's more customized and personalized for you. And so down here, you see all this, how it works. Application, online bank term loans. This is what a lot of people want. Now, before I get into this, so up until this point, what we've reviewed are the revenue-based options, and there's a few more of those we're covering, and there's a lot more options that I may share with you in a questionnaire, but I'll tell you that those aren't best or they will not work. So just skip over those. And I vetted this because of your file, and I know what is acceptable and what isn't. But we've learned about the ERC credit, and we've learned a few things about the revenue-based. We've done a few tips here that others don't share with you. But what I want to quickly go over is ultimately, at the end of the day, none of this matters if you don't have the right character. It really doesn't. I can be here sharing with you all you need to, and I'm an expert at what I do. I could be the most nice, which I am, very nice. I'm very humble, respectful, very educated on things, and I do my due diligence on people and their businesses and what they need to, not only in their business funding world, but in other aspects, because I run other businesses as well, and I'm the CEO and what I do there. So I'm always consciously aware of who the person is that I'm helping. So on a personal human level, and I'm an introvert, you don't need to open up too much to me if you don't want to. I'm very much a good listener. And so I say less and I do more, but I know what to say and how to say it and how to deliver it. It's just when I don't say it doesn't mean I don't know. And sometimes it's just shocking at times that I'm just trying to gather my thoughts. But I'm a very considerate person. And what it comes down to is character versus reputation. And many times what's proven to me is that character is what gets in the way of people. It's their ignorance. it's their stubbornness, it's perhaps cocky, it's perhaps their ego, or if it's none of that, or it's one of them, then okay. But you could be the best attitude, you can have the best attitude and effort, excuse me, and you could be the best molded person from yourself. But ultimately, what gets in the way of us going through an application is the character. So, like I said, time and time again, and the reason why, if I were to ever, excuse me, leave the space, it wouldn't be because of the impact that I've made and the value that I've done, or it's nothing to do with money. I'm detached from the outcome of that money by far, honestly. But what it is to me are the people that just continuously go down this vicious cycle of taking me down with them with energy and time and efficiency. And I told somebody like this on my team earlier on a call that it's not me that needs to be receiving this, or I don't need to speak to them that way. You need to address that to them. And this is very energy and time inefficient, pretty much. And whether they knew it or not, I had to make that point because I'm in a position now where I see all of these things, and I'm sure you are, or you'll get to that. But for me, what's been proven time and time again, it isn't the services. It isn't any of that. It's the person getting in their own way, and it's sabotaging, and it's something that can be so volatile and unpredictable for me to even determine. I can understand your psychology, a lot of why people do things and why they don't do them. But at the end of the day, it's because people are unpredictable and they lose that loyalty. And with me, a lot of people don't lose loyalty. It's just those people who do come in for a short time, not a long time, and they don't see this as an investment into themselves as much as in their business. So I'm seeing the whole global picture of things. I'm not judging anybody, but I just wanted to say that again, just so you know, if you're new to watching my content, that you really do take that to heart, that I'm very serious about this stuff and not wasting my energy and time. Because if you're that person, then we leave that out the door. I'm not saying I wouldn't work with you, but don't bring that friction and resistance once we're going through everything. It can start off like that, but we're going to end it. And that ends once we go through the application. We're in my world now. And then I'm going to help you and I'm going to take care of you. I won't bash you. I won't pressure you. But if you start doing things that are way out of reach and you know they are, then it becomes a big burdensome. And at some point, we have to start saying, hey, my team and I are not willing to work with you. And you're just not understanding. And it's just, you do understand it, but you don't want to. So over here, online bank term loans up to $350,000, and they can even extend up to $500,000, $700,000 I've seen, especially if you go through other banks. But for a majority in this market, what I see an approval for is about up to $200,000 to $250,000 for an average. So without collateral and monthly repayments, with your choice of 2 to 3 or 5 year repayment terms, come in. We're open, as you see there. Online bank term loan option. And again, guys, I may leave this document below. So we've gone far enough into time and you're like, well, you should have just gone through all of them and listed them and then gone through them. Well, there's different ways for me of covering this. And I've made other videos on this already in the past, but this is just a different way. Online bank term loan option. This could involve collateral. Normally it doesn't. If it's a very like lower cash flow based business, then maybe, but usually they don't with this option. But it can take longer to receive your funds and could be more difficult to approve through underwriting. And for the loan size, it's not so high. So I wouldn't always start here. So you may be qualified for like 600,000 or 700,000, but this is another option if you want to start with less and then add that other one on top of it if it's possible and feasible. I'll go to the comments in a second. Appreciate you. Thank you for that comment. I did notice. If you qualify for traditional banking, then you could qualify with an online banking institution, and not online and offline are exactly built the same, especially underwriting. So if you didn't qualify for your local bank, like I'm with Chase and a few others, then if you don't qualify for those, then we may have some online bank term loan lenders, but keep here with me as I'll go through the qualifications, which is similar to somewhat of a physical location in a sense, but it's just digital, FDIC insured, etc. But it offers more flexibility and less requirements. So this could be a good option. Here are some of the details of this bank term loan lump sum. Offers you between $30,000 to around $350,000 in loan funding. Your choice of 2, 3, or 5 year repayment terms. You get monthly repayments. There are no prepayment penalties. You get fast loan funding, typically within 2 weeks. So it's much faster than getting an SBA. And this is the bottom just before the SBA. And before I go to the comments, I do want to mention this. If you guys haven't heard me say, I reverse engineer everything. So that's my mind. And I look at the height of a product. And usually most people, what they want are the SBA loan. And so up here, I have the coveted SBA product with the SBA 7A, 504, you have 8A microloan, the cap line program that's underneath those. But up here, usually that's what people want. And everybody has a different, what I call funding value ladder. But up here, you have the SBA. Just underneath that, I would say you have the bank term loans, bank lines of credit. There are a few that intertwine in between that. Underneath it, you have the collateral-based products with account receivables, inventory financing. You have equipment, heavy equipment, real estate, commercial real estate, and or developable land, stocks and bonds, other forms that are acceptable as collateral. Underneath that, then you have the revenue-based without collateral. We covered that at the top of this document, and there are more options, but there's one that I know it's best, and it's what's suited. And there's direct lenders, there's indirect lenders that I can go to. But in this market, I always say I go against going directly because I have those relationships already, but I go, let's do it underneath this brokerage. It's best. I already have those direct lenders I'm going to go pull from anyways, myself and my team. And then we can say, okay, this would be in the best interest for you based upon what we have received. So there are a few bits. And again, I'll go to the comments in a second. Underneath that, you have the personal funding options like the term loans, installment loans, personal lines of credit, personal line or business credit cards. And just a level below that are startups that you can mix in with those personal funding as well. 401k, IRA, home equity lines of credit, venture capitalists, angel investors. I'll share with you guys this stuff too. And then underneath that, you have the entity formation, the incorporation, the start of your business, the formation of the business phone number, the address, the state of articles of incorporation, and within your Secretary of State, your LLC, making sure you're listed in the directories, your 411, getting vendor credit at the very bottom. There's a lot of stuff that entails with that. But let me go back to this. We'll try to close this up here shortly, and I'll go to the comments. But I'm not going to speed. I'm going to speed through this very quickly, guys. But let me just go through the eligibility. Have a minimum of 2 years. Actually, let me scroll up here. Here are the benefits of it, as I mentioned here. But the fixed annual interest rates start at around 6.99%, 7%, but they're more about based on prime rates, you'll see. So somewhere around 8% now, plus 2 to 3. So I usually see somewhere between, in this market, around 9 to about 16, if not 9 to about 18% is what I see a lot of. And it can fall shortly depending on cash flow and a few things. Leniency on use of proceed options. And that also matters because of credit. If it's higher credit, like 750 and above, it's best to get you lower rates. But not to say if you didn't have less, you could. But usually around that in this market, a lot of times you see. Leniency on use of proceeds options. Term loans can support construction, remodeling, and more. Bank term loan general eligibility. Have a minimum of 2 years time in business. Be a U.S.-based business owned by a citizen or a lawful permanent resident. FICO of 660 or higher. The best approvals I see are in that 700 and above range, but 660 and it's per case basis. So there are things where you may have high balances. Maybe there are some things that are showing that are unacceptable. Have no outstanding tax liens. Your minimum annual revenue requirement of at least $250K. Your business must not have any bankruptcies or foreclosures in the last 3 years. No recent charge-offs or settlements. Your business must have appropriate cash flow to support loan payments. Here's what it can be used for. General working capital all the way down to business acquisition, partner buyout. I'll let you take a look at that. Replay this video, rewind it. Saying it like it's a, what do you call it? VCR and all that. Cassette tapes. There are several common and eligible uses, as you can see there: startup financing, house flipping or real estate investments, development, passive investments, refinancing personal debts. That won't work. For floor plan financing. Industries that are eligible, kind of go through that quickly here. General eligibility, we went into that just a little bit. Credit, you see there, you do need business credit established. Liquid credit of 155 or greater. So it's not just to say you have strong personal credit. You have to have strong business credit. Public records, search for business owners, no bankruptcies, and all this that I somewhat mentioned earlier. Cash flow analysis, it's calculated using these documents that I will do myself and my team included. 2 years of business and personal tax returns, year-to-date profit and loss and balance sheet, business debt schedule, 6 most recent business bank statements, barriers to fund, declining revenue trends. Not to say it won't, you'll be declined, but these are just some of the things. On file tax returns, criminal records, businesses or guarantors that are mid-litigation, huge one. Undisclosed debt / UCC liens extra. This is what I can calculate. You don't have to worry about this stuff. Global debt service coverage ratio, business debt service coverage ratio of greater than 1.15x, equal to or greater than, a lot of the times we want greater than, that determined by business income and business debt. GDSCR determined by business income and debt. Sometimes you just see debt service coverage ratio where we're not looking at it globally on business and personal, but we want to have the right assessment and making sure that you have enough so you can make the payments on. So you have a little bit there. I won't go through all of this here. We can conduct a soft pull that will not affect your credit score. However, in processing your loan application, the lenders with whom we work with and that I have will request your full credit report from one or more consumer reporting agencies, which is considered a hard pull and happens after your application is in the funding process and match with the right lender that I connect you with and who is likely to fund your loan. Underwriting guidelines based on the debt coverage analysis, loan proceeds, as I go into that in a second. But let me just quickly speed through this and go to the next part. So I have the SBA 7A option. Let me see what I have here. Got it. Do you have other payment processors, Alma? Is it only Stripe? There are a lot of payment processors out there that are available. Stripe could work under the right lender, but a lot of the times we have the wrong way of depositing and the way of our processing. So with things like a Money Lion, that's one. There's many others that they wouldn't be able to work. It depends also on the transfers, on how you're transferring, but we want to make sure that it is a business checking account at the end of the day. That's ultimately what matters to us. So there's a lot of these processors and platforms, I should use the word, that combine personal and business accounts. And what we ultimately want is a business checking account. So if that money is being transferred from Stripe or to another account or however you're managing those funds, making sure you're not commingling and adding anything from personal to business, because we can see that in the bank statements. I'll look at a lot of that. Just make sure it is legitimate. There's a lot of times where I see a lot of Zelle transfers. That could cause some issues depending on how those transfers occur. Again, it begins where the transfer starts. That's ultimately it. So you'll likely have a different payment processor. There are a lot out there that I've helped out people with as well. But ultimately, what matters at the end of the day is that you are moving funds from business checking to business checking and not from personal to business. And that wouldn't work. And what I want to do is bring this up very quickly before I go into the SBA loan. And again, guys, this option will be down below in the description. And the reason here, one second. I'm going to pause for a second. That's when I'm on my best, guys, when I'm not speaking, just so you guys know. And this. So what I want to mention here, and I didn't want to miss any of these, I had them by mind, but here's another post that I created and I want to go through very quickly. So when we're talking about more specifically outside of that payment processing, when we're talking about online banks in total, only online banks that would work are Square. Just so you know this, all else like MoneyLion and Found and others will not, since they can't process the ACH part and even the decision logic bank verification part. So what I would always tell people is try to get in a traditional bank, an online bank that accepts the ACH transfers, the ACH withdrawals, deposit and withdrawal. And if it's not business checking to business checking, that's what makes it very difficult. There's another one that came to mind right now, but I won't get into all of that. So that's what I would associate it with. Now back to this. Give me 1 second. Make sure I got that. One moment, guys. Might have missed a piece on this SBA option. Okay. All right, let me move back to that. There it is. Just had to make sure I had another document open on my other tab that it aligned with this one. Okay. So here we have the SBA option. And I listed one with South End Capital. That's an amazing one that I help out a lot of people with. Sorry, phone call. And this is just one of many of my preferred lenders. I have a vast network of them that I can pull from depending on the institution, depending on how you're set up fundamentally from the market fit and more. but this is one that I recommend and I've helped out plenty of people with, and I'm doing that right now with many. But best with the SBA and can take 4 to 8 weeks or so to get for non-startups. There's a little bit of information there. I'm going to speed through this, but I go through non-startups and startups. I want to get done with this video. But you see here what you would need, what questions I would ask for, and also pertaining to your exact scenario. So you can see that there. You do have to have stronger credit. They usually look at all 3: credit, cash flow, collateral, and I'll do all these analyses myself and my team. And so there's more here steps on the approval process, and then the next steps, so you can get it done in 1 to 3 months. So here usually you see even less than a month, depending on the service. There's lower products between 30 to about 150,000, if not up to 25,000. There's just a few of them there. The application there as I put together, and this is stuff that I put together myself, guys, for the most part. I've iterated it so it is best for you, and it's customized for your situation as well. Situation here where the documents that would be needed, it depends also on the current calendar year and what we're asking for. Business line of credit, this is another option, and there will be other multiple business SBA 7A loan options. It's a lender, so they're a division of Stearns Bank. I can get into it deep, but just there's a branch. So what happens is with a lot of these banks, they like to branch and have somebody else handle certain departments. And so they want to have it very systematic. So what I do is I'll get people in before we even get into an application. We'll review all of this in your specific situation. And then I'll ask for certain documentation up front if I need to. Other times I'll say, let's submit this application. And then we can go through the process first of reviewing. And then once we get to the processing stage, at that point, then I can ask for documentation myself and the lender. The lender and I are communicating, just in case you want to know, on the back end. So whether that's a phone call or it can be through an email dispersed, and or we're communicating and we're most up to date with everything. And when we review all documentation together, we kind of have a final decision on things. And they let me know their thoughts. I let them know my thoughts. We reviewed things. We did our numbers accurately just to make sure everything aligns. And what could happen to the situation if a client were to go through, if it were to go through, what could we then help them with even better? So there's a lot that goes into this, especially when you partner with someone like myself, because I'll be able to understand that much more in depth. So let me go back to this document. Hopefully that answered your question. So this is just a business line of credit option that's very conservative in this market. And a lot of the times you're seeing upwards of 400 to 500,000 in approvals. And with stronger credit, not just the minimum requirements that you need to meet anymore, normally 700, 725 and above FICO Experian credit. And even there are some lenders that will look at business credit nowadays. Not that they need to look at getting you approved for by looking at business credit, but some lenders will want to see what have you established underneath your business, because it's harder to get approved for these and with everything happening right now. But you want to have normally stronger time in business, 2 years and above. A lot of the times they want to see more than that, not even 3. A lot of the times they want 5+ years time in business. And it just depends on the setup of your business, your revenue, and that you're not over leveraged and so forth. And so here I go through these options. Usually it's weekly approvals in this market. Monthly can occur, but it's harder to, especially in this market. And even if we were to go over that in a recovery phase, it's still difficult to get approved for monthly. I go over here some of the options or some of the details to it. I gave you an example on draw fees that you're paying on only on interest. If you didn't know, this is something where you can take the product and then you only pay interest on what you use, which is an amazing thing. So it's great for emergency funds. It's great for just pulling from and paying any kind of expenses, and maybe you do have a growth and expansion project that you can withdraw from. Maybe it isn't enough, but we can add a business line of credit on top of an advance/term loan if necessary and if it works. So here are just some quick numbers. I won't do all the mathematics run down with you right now. I want to get through this video, but I may leave this document below and you'll be able to see some examples. But here we go through this on what would decline a file. You can see that very quickly. I won't go through them, but note here what we would need, documentation, notes. If there are more business line of credit options, I'll share them with you, especially in that questionnaire where I'll share with you more options, but I'll tell you this one isn't best. I'll position one to be better than the other. Equipment financing options, you can see there. And we go through a few of those. Asset-backed or collateral-based. I won't go through each and every one of them here, but you see there with CRE, commercial real estate and or developable land as one option. You have inventory financing, account receivable, cash out refinance is a different situation. You have personal business slash startup loan. And this is where I want to start. And this is one great option for those of you who are startups and asking, how can I qualify? And what would work and what wouldn't work. So it's kind of like what we spoke about and what I said to Alma here earlier on what works, what doesn't work, and how or what kind of payment processor you have can really determine on whether you qualify for funding or not. But ultimately, what again it comes down to is there are a lot of these out there where we want to make sure that everything is being processed through your business, nothing being processed through your personal or your personal accounts, and then being pushed over to a business account. Because again, that doesn't look like stated revenue to us. And whatever payment processor, that be it or not, that you're moving from business to business. And there are some online banking institutions out there where you see personal and business, making sure you're on the business side of that equation and that everything looks clean and that you're depositing, however you're depositing, it's going directly into that business checking account is what we want to see. So if anything ever does come up, any other kind of payment processors, ultimately at the end of the day is we want to make sure that everything is being deposited correctly. So back to this. Personal slide, and we can go even deeper into Stripe and all these, just in case you guys were wondering. I can go deeper, but I'm trying to give you guys the actual answer instead of going too deep into seeing what those actual deposits, what those actual transfers are right now and everything. But best option for personal slash startup slash business funding, you can get a guarantor. Here, let me move this over. Get a cosigner. And also get someone who can apply with their own credit, their own individual credit that is willing to take on the debt under them to help you get approved. If you need this to work, this is the best option for stretching out your terms and lower interest rates, and helps if depositing frequency is not every day or every other day like a restaurant or retail business. So if you're in the space where you're not depositing frequently every day, then that may be troublesome when you're trying to get revenue based and you have these medium to high rates. But ultimately, what you have to look at is the payoff of this. What are you doing with that money at the end of the day? Are you just sitting on it, happy enough for it to roll over to the next year? Or are you saying, I'm paying this off before a year? That way I'm more prepared for the next year because I'll have more payments, whatever that is, taxes related or anything else. And you don't want that to roll over into another year. That's ultimately what my question is when I'm seeking funding myself is I want to pay this back as fast as I can because I don't want to have this roll over. And if I had it roll over and then something else comes up in my business or something else in life, personal life, where I got to take on more personal expenses, then what's happening there? See, now you find yourself in a situation where you're over borrowing, you're overextending yourself. And then that point, you're seeking more funding just to recover, and you're just trying to pay off expenses at that point. And you're trying to consolidate other cards. And by that point, your credit is shot down. And then no wonder you guys can't get approved for these because of all these little things that happen and you weren't prepared for, or you thought you would just sit and get comfortable with that money. So longer term doesn't always translate into better. So take on the debt underneath you to get approved for. Best option for stretching it out. 1 to 5 years, you normally see at least a 680 FICO Experian credit score. If not 700 is best, is what we look for. I've seen people get disapproved with the 680 even because of new opened unseasoned accounts, trade lines. They have too many inquiries, and that's a huge issue in the last 6 months, in the last 3 months. And then they also, if they looked at per credit bureau, specifically when we're approving also for those personal lines of credit and those personal credit cards and or those business credit cards, and we see too many inquiries, even on a soft inquiry level, these lenders are able to understand that you've applied way too numerous amount of times to different institutions, that you're just rate shopping, you're just term shopping around, and you're not actually doing what's in your best interest. So I've had that happen before with people. It turns into a tricky situation and I don't want none of it. So when people wonder why I never respond back to them, they wonder why. And I go, well, you didn't know that shopping around would cause this issue. So I'll explain it to you. But until you fix this, then we can go ahead and come back to things. But that's also a pivoting point where people just try to take up all of this energy and time. When after I've relayed and I've said this and I've explained it, I've even shown it, you're just over leveraged at that point. So another situation I have right now with a client who wants gas cards, fleet cards. I know how all of that works very, very well. And they're looking for cards. And somebody told me, hey, while we're trying to help them, can we get them gas cards in the meantime? And I can't say yes or no to it because I don't know their credit profile. I haven't looked at their soft credit pool. I haven't done that yet to determine on what do they have, How many inquiries, if any, have they developed? Do they have any late payments? And so if they are looking for gas cards and they're looking for more funding, how much are they looking for? 200 to 300,000. Well, they won't likely get that if their credit profile is like this. And the first round won't normally happen where you will get that much with just business credit cards or anything just tied to your EIN. So for those of you wondering out there, can I get funding based on my EIN? If you're building your trade credit, yes. Vendor credit specifically, fleet credit, and a few of these, then that could work. But EIN only business loans? No, because normally what happens is it requires an extensive amount of credit history, extensive amount of cash flow, time in business. It's a high cash flow in business, profitability wise, and a few other things. So with that, you have to pledge collateral on the business and personal, and it could be all in combined, and there's more. So EIN only, whoever's telling you guys this, be very cautious. I've made video content on it, but just breaking down that they normally don't really occur. So stop looking for something, a loophole, and there might be something here and there that could work, perhaps with a credit union or something similar, but it's time to stop looking just for these EIN only. What are you running from? What are you hiding? What do you need to fix, if none of it, or if some of it? What do you need to fix? If it's credit repair, if you guys need help with that, I have my #1 recommendation, and I'll link you guys to that down below. Very cost effective. But all of this doesn't make sense if you're not serious. That's the thing. Don't dip your toe in and expect it to work. I won't pressure you, but at the same time, don't waste my energy and time. If I'm putting together an email to you to follow up with that's not automated or none of that, which a lot of the times it isn't, take the time to give me feedback. I don't want nobody going through those things. You shouldn't yourself be in a situation where a customer does that to you, or an employee, or something similar to that extent. So let me get back into this topic. But what I just mentioned here is if you are going for cards, be careful, because there might be a personal term loan option we want to start with first, and then we migrate into another option. You have to build that vendor credit profile to get those cards with higher limits, and you're looking at getting it only on the EIN only without a personal guarantee. Otherwise, you'll have like a net 22, and that's because it's not revolving and it's not rolling over to the next month. You have to pay within 22 or so days, and if you can't afford to do that, and then think about the APRs and all this stuff, then you're getting yourself into a tricky situation. And so here you can stretch out your terms, and then you might say, please skip here. I won't even leave this here. I can just erase this depending on your file, though. That is requirements, 50,000 plus in annual revenue. What are we on time? I'm going to close up here soon, guys. 101 will close up in about 10 or so minutes. I'm going to speed through this as much as I can. 50K plus in taxes or pay stubs, verifiable. There's a little bit more we can verify by, but I'll ask for taxes, majority of it. 0 time in business and personal. Just, if you have business, then that can help you if you have a business established, because it depends on how much we can ask for, and it'll help you with approvals as well if we had to ask for them. 0 time in business, but it does require you to have at least 5 trade lines. 5 trade lines, guys. That's the point. You guys can buy trade lines, but be careful with what you're buying. Make sure that they're aged and they're legitimate. I would always advise against doing that. If you can use somebody else to take on the debt, I would, but be very cautious about what you buy out there. 20,000 to 500,000 in approval amounts, 700 plus Experian credit score. If not 670, we can consider, as long as things look clean enough. 6 to 18% cost of capital. So you're seeing a trend now where the interest rates are lowering. And from the earlier option, I don't think I said this, but the earlier option, you usually see somewhere between factor rates of 1.19 to 1.55 or 1.69, meaning that it's not based on amortized interest rates unless you get over 12 months. But still, even with those products, it's not amortized on that remittance schedule. So what you see is a factor rate, and those you can probably convert them into an APR, which I've done, and you can do it yourself, but that's not what it's looked at. And it could be high, but the thing is, are you using this money correctly? Does the benefit exceed the repayment? I'm sick and tired of people out there creating content on and commenting on, well, these are bad. These are turmoil for your business, but they don't really even help people get funding with them. They probably just hear about them. I actually help people get funding with these services. And no, do I want to lead in with them? No. Do I have to? Sometimes, yes. Why? Because it depends on the client. So if you're upset, if you're already coming into this hard-headed, and then me giving you a service that is something you don't want already, and I don't want to have to express with you, but that's what's best, hard-headed plus hard-headed product, explosion. That's a new explosion. Explosion. Yeah. So back to this, and I'll try to go to the comments if there is anything. So 6 to 18% cost of capital rate, lower interest. That's a huge plus. But again, it depends on if you can qualify, depends on how you use those funds. On the personal side, using as personal debt being reported. Unsecured debt with like the advances, a lot of the times they may not report timely payments, so it doesn't have to appear. Now, if you go into default, then you get yourself into an issue on your credit. 24 hours, 1 to 2 weeks time to approve and fund. Soft pull initially for pre-approval. To get hard offers, it's hard pull, which is standard. You can decide then if you want to move forward. Once initial contracts are signed and all documents are collected, it's a hard pull to get you soft offers and then develop that into a hard offer, which then you can decide if you want to move forward. Note, the origination fee, if you guys heard me say about the ERC, 15%, which I know it sounds high. Of course, if I were in your shoes and I didn't understand anything about financing on our end, I would be questioning it. Truly. But that's how the lenders, and I've been on this side long enough to know, okay. And receiving funding myself, I go, okay, I see it. But that's how the lenders, they compensate themselves by offering you a low interest of 6 to 18% with monthly, not daily, weekly, like the revenue advanced term loan products. And the other ones, the bank term loans, monthly. Lines of credit can be monthly, but usually weekly or daily in cases. But this one being a monthly repayment. So if you can afford, that's the question. Can you afford to do this? The only things that the lenders want to know are two things. Can you make the payments? Can you completely make it all? Pay it back on time? Two, what if you don't pay it back? What are the repercussions to that? Those are the only two things that the lenders care about. I care about more than that. I care about you. I care about the actual use of funds, and they do too. But I care about all of these other things because they have a better way of working themselves out in a lot of cases. So in terms from 1 to 5 years, the amounts that needs to be fulfilled and the effort it takes on our behalf, myself included in all of this part of the process, it's quite a bit. It's something that you need to consider, and the rates you get are usually better compared to alternative options like the cash advances, traditional merchant cash advances. Plus, you get a better term to start with that makes up for all of this. We may be able to lower it to 12%, but not always. Each file is different, and the fee is not ridiculous when it's unsecured, no collateral, max funding. You can maybe walk into a bank and maybe qualify for, let's say, 10K, where we can help you get then 100,000 with our resources and expertise, which is also why we charge a 15% success fee. And I vetted the best lenders in the space, guys, in case you guys are wondering what I have. And you have to keep in mind that the benefit of this exceeding your repayment and how you'll use these funds to potentially double, triple, quadruple your revenue and or perhaps save you more money and keep your business afloat, depending on the situation. You're using it for real estate purposes, a commercial mortgage, and you need to save money. You're transferring that mortgage over to somebody else who is now taking over the payments, and there had to be no down payment involved with this, and it actually lowered the costs of doing business. And so it just depends on the situation, right? Important details: have less than 35% utilization, minimal recent inquiries. This gets a lot of people. Be very cautious of that. I won't go into it all specifically on all this, but just have minimal amount. I may update this a little bit so you can see more. Strong credit history, no recent negative items. Based on your debt to income ratio, when people ask me, what do I get approved for? It depends on the debt to income. You are most welcome. Appreciate you. Thank you. I see your comment. Now here, try not to have too many recent new trade lines, new opened accounts. They're not seasoned. Even if you buy one and you didn't buy the right one, and knowing that you bought one, some of these lenders, they shy away from that. And we can try to combine it with the business loan / advance / equipment loan, real estate loan, etc. separately. So I've seen a lot of situations very quickly. I know. Thank you guys. Appreciate you. Thank you for your time. I am very busy today. Like, it's 10:38. After this, I have to go and put a little bit of my material up on some of the social media channels. I do have to go back to some questionnaires. I'll be probably catching up on that tonight because of this a little bit. But just like you guys, I'm very busy. And I have to go look at files too that have been submitted. Try not to have too many recent new trade lines. Okay, so what I was saying here is I've had a lot of times where clients, they come in and depending on their use of funds. So if you're looking for like a new construction build and you couldn't qualify for traditional new construction funding with my best lenders in that space that I usually communicate with them every day and we're in meetings and stuff. But if you couldn't get funding through them, then another means of getting funding, and it's better too if you have multiple uses or if you know something will come up that you need to use it for, depending on if it's real estate related or not. This is a great alternative to that. So if you don't have the minimum property value at where it needs to be, this is one other great option. For personal lines of credit, so I'll quickly go through this. So here you guys can just view it. I'm not going to go through all of it. I'm going to kind of, you guys can only imagine being an introvert having to talk a lot. I don't like doing that. But I know this information is very handy and helpful for you guys. And I do a lot of the stuff on my back end, and there's a lot of options here. So I'm just gonna quickly show you this. Just take a look there. Post, pre-approval, and startup options, the questionnaire there. You could, the application. You guys can even get started from this page. So if I have this link down below and it makes sense for what you read and you see the alternatives to that, then you can go ahead and get started there. You can send me an email if you need anything and you want answered. Personal funding slash startup funding option 2. I may not recommend this. I say go upwards, and this may look different in time. Credit line hybrid, 0% interest for 6 to 18 months. I'm not going to go through that entirely, but this is through business credit cards. We can stack on top of one another and get you the approvals that you need. Over here, SBA microloans, if possible, the community advantage, angel investors, equity crowdfunding and other options, venture capitalists, angel investors, fixing, increasing your FICO credit score. I do want to pause here because I have information on if you guys do need help with credit repair. But too many times I hear people say, I need it. I'm committed. But your word doesn't match your actions. I was brought up, like many of you in here can relate, that your word is your bond, period. Don't question it. Your word is your bond. And if you question it, it's excuses. And the thing is, we were all brought up different, but keeping your word, if that's all you have is your word, how are you dependable? I went to my dentist appointment yesterday, and while I was sitting on my chair, speaking with the lovely lady that was assisting with my x-rays, we had a good conversation before the dentist came in and started helping me, and I have a good relationship with him. Very cool guy. Know me, and I know him. And so what ended up happening was this lady, she's like, you wouldn't believe it, but I actually had somebody who was here an hour late. And for me, that would bug me. You're done. If you're an hour late, you're done. And so normally I will miss some appointments here. If you guys are wondering when you guys schedule things, I do miss some from time to time. And I can't get back as soon as possible. It just happens. Something does come up, literally does. And I'll try to get back to you guys and say, hey, I couldn't make this and that, but I'll try to do it better next time, or we can do it this way instead. So it does happen. Just know that. I'm not avoiding things. It just happens. But when you're scheduled to go see somebody, and you have to be mindful too that they have a schedule, that they have to see somebody else. They have to make reports. They have to do things that if you're not on time, they're not going to see you, or they will take you if they're that considerate enough. But in an hour, I was like, So credit repair right here, guys, I go through the benefits and features. I go through the amount. And then down below here, there's an option to get started. I'll break it down for you if you need to. It's all in there. But building business credit, that's what I recommend. I have a free business credit building video series you can view there. Business credit cards that I would recommend. I'm gonna update it a little bit. Home equity loan, home equity line of credit, 401k IRA, stocks as well. SBA EIDL latest updates, employee retention credit. That's what we spoke about in the beginning. Real estate submission form. And there are plenty more. I just left some of them here. But conclusion, there are many other services as well, as I spoke about there. And then what you want to get started with the questionnaire there. So let me pivot and we'll close up here. 1 second. This questionnaire will be down below in the description. If those of you who already have seen it, you guys are more than welcome to go. I know you guys are busy. And so this will be down below, and I will go through it here. There are just some companies I've funded. There are plenty more of them. I just wanted to fit the screen there. But here, how it works, you'll be shown that the key benefits are services, and then get the funding your business needs fast or slow, depending on that service. You select from one of these two options that apply to you. Plus, free six-step pre-approval lending checklist will be included. So I can click there since I'm a non-startup. And then get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized email response for your best funding option and options from a real business loan broker expert. Please be serious and responsive. I put in caps locks. Please do not be that person wasting my energy and time and being hard to get a hold of, a response from, feedback from. My goodness, you guys wouldn't imagine how many of these business owners out there. You're busy. Okay, I'm busy. But if I'm filling this out, it's important enough to me. Wouldn't you think that? Well, something came up. Okay, something did come up, but it's been a week or 2 weeks now. So something came up again in a week to two. So it's time for you guys to be held accountable and responsible. And as much as I raise my tonality, if you guys hear me raise my tonality, listen. And so here, please do not be that person. I say that with all respect. I spent a good amount of my energy and time on this, plus a free 6-step pre-approval lending checklist to get you approved for funding much faster without making mistakes. Literally, you can get this done in less than a minute. And about us, you learn more, the process there. There might be a video there, might be changed over time. Okay, so I do want to round up, but before I do, let me look at one of my other tabs here. Give me 1 second to make sure I covered everything. Okay, let me look at this one. Let me open up this other tab to make sure I covered this. Okay, I feel like I have covered all of that in that document. Let me look over this one. Okay. All right. So that should be everything. Let me go here. We spent a good amount of time covering a lot of these PPP loan alternative options, how there isn't another round, or there's a lot of stuff happening with fraudulent activity, SBA EIDL loan options. I know this isn't the sexy stuff you guys want to hear. You guys love hearing SBA EIDL. There's another update on PPP loans. Here's another update on 10K grants, which I'm not saying it isn't good. It's just the general consensus is just so focused on looking at that, and they disregard everything else. They disregard authority, and they see somebody who has a huge following, like count. What does that matter? Even to me, like, I care that you do, like, I sincerely do, but that's a vanity metric for me. Like, why am I going off of counts? And you guys have to understand the history of the platform, and that why are those people getting more views? Because you got to understand the algorithms. You got to understand how long ago they started. You have to understand a lot more than that, than just keyword, than just recommended videos and just searching through a video. And when I see a lot of content out there and I question it and I go, yeah, definitely, I know I could do better than that. Maybe they're just a glorified referral partner and they have a link down below in the description that maybe the video didn't cover, but you clicked it and you were curious enough to go and check it out. But if I were to do this all over again, whether I'm starting a business or buying a business, I know myself and I know that I'm going to be able to do things without seeking someone else. And if I want somebody else to get credit for it, I'm going to go find them for sure. And I'm going to vet them in very carefully. And I'm not your everyday person. So when they do come to me, they know they're dealing with the real thing for sure. And again, it's energy and time efficient for me. And a lot of the times out there, there are a lot of these brokers who are untrained, and I feel bad because they fell into a program or into a state of consciousness and they don't know much, or they're trying to know more, but they don't know how to get there. And somebody's trying to help them buy a course that they're not even teaching them on how to understand how to read bank statements and credit reports, credit monitoring, and all of these different things that entail with becoming a true business loan broker. And tax returns, everything included, whether they funded a client or not. And so it's unfortunate that in this industry, there are a lot of people who don't really like get hands-on in the process. I do, because I want to review and make sure that everything is done correctly, even before we submit anything. And whether it's a direct lender or it isn't, there's a lot that I'm doing on my back end, in case you guys didn't know. And you were wondering, like, oh, they're just sending me, no, I'm doing work on the back end of things that you guys don't see. And you guys probably take for granted. I know a lot of you don't, but some of you out there, it's like this is your wake-up call to say, this guy isn't your everyday person, and people refer people to me because I am truthful, I'm loyal, and I give people the benefit of the doubt. Sometimes I don't say it the way it needs to be said, but other times I put my foot down and I literally say it the way it needs to be, the way, yeah, the Nintendo Wii, the way it needs to be said, because there's too much of this. Like, I want this, I want that, and if I don't get this and I don't get that, and so what I say to you is, why aren't you fixing the diagnosis? Well, nobody told me to, or I am currently in the process of, what do I need to do to get approved for this? Okay, let's go way beyond just business. Let's look at your character. Who do you want to become? To be the person in your business, and then to become the person in your business getting funding. Those are the things you need to go through, not around. And everybody does that. I did it in the beginning where I was just not focused on my personal side, and I was just going around just trying to figure out how to make money in my business. And what I was missing all along was this graph that was plotted for me, where I needed to go from here first, like that, instead of doing more of a curvature around like that. Because everything, when it came up, I started to diminish, literally. But when I started to focus on setting the right example for myself and my family on my personal level, that I needed to work on this, that's when I started seeing consistency. That's when I began to think more outside of the box. That's when I began to say I'm more persistent than just letting something break me down. Maybe it was small, perhaps it was huge. I've been through a lot of that, but I didn't dwell on it. I knew what I could do. Either there was a pattern there that already showed me to, or I knew based on these experiences and what I've already built that this was going to continue to push me. So a lot of you guys are stuck here, literally stuck here, thinking that the funding is what's going to help you, when in fact, you guys completely forgot about yourself. And that's ultimately it. So if that were more fine-tuned, just imagine how much more fine-tuned, and you would recognize what type of financing actually is best. So that's what us entrepreneurs, business owners do. So I wouldn't ever make a false decision, and I need the logic. I need to separate my logic from my emotion. Yes, there's some emotion based on that makes my decision, but I know logically I'm making the best one for myself and for everybody else around, you included. So I think that's where I want to end it. There were a lot of great questions asked here. And for those of you that couldn't join me, because I did do this spontaneously, hopefully you'll see it later on the replay. But we have great questions that were asked. Appreciate you guys. Thank you for joining me today. Like always, I tried to answer these very thoroughly. So again, just whatever it is, always remember that you're depositing into that one business checking account that's primary, whether it's from Chase or it's a Bank of America, it's a Stripe, it's a Square Capital, or whatever it is included. We want to make sure that if we're transferring funds from one to another, that it looks like organic revenue and deposits. It's not something that we're moving in from a personal account underneath a specific platform to then put it into a business. And if it is personal to personal, and if it's just personal funds going into that account and you're transferring it to a personal account, wherever it is, then there is an option for you, but you'll be very limited. And if you're very limited, let's say on your personal or on your revenue based, but you have stronger annual revenue and you have better credit, and if you had those personal tax returns that look right, then we could look at credit-based financing. But if not, we have to work here, or we got to work down here at vendor credit, or we get to add 401k IRA, or a few other options. Okay, everybody. I could cover a lot more in this video, but I think for time, now is it for me to get going. Appreciate you guys. If you like this video, please give it a thumbs up. Share with others who you feel will find value out of it. It can be a complete stranger, a friend, or a family member. And if you haven't subscribed, please go ahead and do so. And click that bell notification icon so you do not miss any future content on top of this, on top of EIDL, on top of PPP, somebody who actually brings you the real content. I've seen a lot of phony content out on the web, not only on video, but on blog, because I'm on all platforms. And I go, you said stated income, but that's not what I saw, at least, or that's not what they saw too. And I go, that's actually not stated income, or this has changed to be this. Certain other ones are more credible. And I'm not taking away that, but other ones are very questionable. So be very careful about who you guys are getting your information from. That is everything from me. I appreciate you guys. Thank you for tuning in. And I'll leave all information again down below in the description. I'll leave the document that I went over. For anything else that you need to get processed, what do you want me to take a look at? If I could take a look at it beforehand and all else. Okay. Appreciate you guys. Thank you for tuning in. Talk soon. Bye.